Hi everyone, today is Monday, November the 21st, 2021, and I'm making this video in response to a question I received from Usha about a different video that I had, maybe it's about a different video I made, which is called Commodities to the Moon, or rather Commodities to the Moon. Anyway, so the question was if I thought that gold will go up in price, and that is a very complicated, or rather not complicated question. Short answer is yes, but the complicated part of it, or the nuanced, I should say, because nuance is something that has like details in the way you think about it. So I'm making this video to talk about those nuances in what I mean when I say the nuances to the question, will gold go up in price? Which price measured in what currency is my counter question, first of all, because if you look at it and think about it from say the point of view of Japan and the Japanese yen, gold went up this past year in their currency. Oh my god, in their currency, it's been not just in this past year, it's been going up like in spades over the past few years, but just this year it went up 30% in their currency. Okay. In the dollar, it's pretty quote-unquote stable. In Indian rupees also, it has gone up maybe 15%, I think, in Indian rupees. Okay, so in INR, in GBP, even in GBP, pounds, in Japanese yen, that's JPY. So in all of these currencies, it has gone up a lot. In the US dollar, it has been relatively stable. But has it really? Now, the paper price has been stable, but that's a very complicated game. And why is that complicated? Because I should actually show you on some websites that the government themselves maintain that are public information. Okay, this is not this is no secret government information. Actually, so I'll tell you those websites, and you can go on it and check it out. Go to the US debt clock. Okay, just Google usdebtclock.org. You will reach this website where you will see all this flurry of numbers of how much a taxpayers, or how much is owed by each taxpayer, what is the current national debt, and all this. It's a whole flurry of numbers. Forget all those numbers, okay? Don't let them overwhelm you. Just scroll all the way down to the right hand side. There's a section that's called, I think it's called precious metals, or US debt clock precious metals. The direct link, if you want to skip all that, I think, is US debt clock / precious metals. But why bother if that thing doesn't work, right? So just go to the main source, scroll all the way down on the right side, on the lower right side, there's something where you can click further and go to precious metals. Now when you go there, you'll see the list of all the countries that have and their gold reserves that are reported. Okay, and I'm saying that are reported because some countries don't report their reserves. In fact, more recently, China never reports it because they don't feel like they need to, and part of me is like, why does anybody have to report anything to anybody, in a way? Like, especially a sovereign country, right? Now, I'm not pro-China, whatever. I mean, I am whatever. Everybody is. I'm pro-humans, but I don't care one way or the other what country people belong to. But in any case, the whole point of having a sovereign nation is that you should be able to do what you need to do in your sovereign nation, right? So whatever. I don't have an opinion one way or the other on this whole reporting thing. But some countries don't report. In fact, now more recently, I think even Russia has said that it's their national secret of how much they have. They're not going to continue reporting. And I'm like, whatever, to each their own. Anyways, back to this website. At the very top, you will see all, the list of all the countries with how much their gold reserves are. Forget all that too. Those are all, whatever people want to say. Okay. Now you scroll all the way down. And again, you go to the right-hand side. There are like 3 or 4 columns. The lastmost column is the ratio of crypto to paper. Forget that for a moment, okay? That'll become important after central banking digital currencies come out. But for now, you can forget about it, or you can just take a screenshot to see how it has changed, now versus in the future. And just I would recommend really taking just screenshots of these things, because they are once you start taking screenshots of things. Jesus, I can't talk till morning. I'm so sleepy. Once you take screenshots of things, you will start to see where things are being manipulated and why this. When I'm saying what's the paper price of gold, the gold paper price in dollars, and why am I even saying paper price? This will all become clear. So now in those last columns, or those last few cells, you will see there's a paper. You'll see the gold price. The gold to dollar. It's called gold to dollar ratio, which is correct because it's not a price. It's an exchange rate. So the US government actually understands gold very well. They just don't educate their US public about it, okay? So they understand it really well. That's why they call it the paper to gold ratio, which is absolutely correct actually. So the gold to this thing ratio, and it reports it like live as of this moment, and what it was in 1913. Okay, why are they going back all the way to 1913? Because 1913 is when the Federal Reserve banking system, which is a system of 12 private banks, when this system was created, that's when so they're tracking from that point, okay? And why are they tracking it at that point? Because the Federal Reserve, they are holding the gold certificates at the acquisition value. Now the acquisition value is not 1913. The acquisition value is actually 1971, which is when they demonetized gold. And the acquisition value that they've recorded is $42 per ounce of gold, because that was what it was in US dollar price in 1971, $42. So why are they keeping tabs like that? Because that is their internal way to know how unsustainable their paper printing is, okay? Because paper printing, digit issuance, whatever you want to call it. So that's why they are keeping track. They need to know this, because if the debt becomes like ridiculously unsustainable, and they'll just reprice everything, and that's that, right? And then the clock is reset in a way. But they don't want to reset that clock too fast, because otherwise all their debts also will be revealed in that amount, right? So what they want to do is to inflate away the debt. And this is where that other video that I made that is called Inflate Away the Debt, What Does It Mean? They want to inflate away the debt to tax people to death before they do their revaluation, even if they end up doing it or not, who knows. But they want to do that. Squeeze the juice, the life out of every person before they have to, pony up and be truthful, which like gold is the only truth sayer. That's when, but anyways, I can go off on a massive rant about this, obviously. So let me tell you why I'm saying this. So you go and see that number in that column, okay? And there's next to that, so there's a gold, gold to dollar, and there is silver to dollar. What you will find in the silver to dollar, so gold to dollar is like, so let me tell you, in June, okay, when our levels were really bad, it was 14,000 per ounce, okay, $14,000 per ounce. Oh Jesus, something going on here. Go. Okay, $14,000 per ounce. And right now, I don't know, because of the interest rates going up, and that's another slightly more complicated mechanism for how and why. And if you have more questions on that, I'll answer that, but I'll stay on this point for now. So it was about $14,000 per ounce. Now it may be 9,000, 8,000, 7,000, who knows, right? It depends on how much debt they are burning off. Because tell me, is gold paper price, spot price, is it even $7,000 per ounce right now? No, it's not, right? I mean spot. I'm talking spot. I'm not saying like if you try to buy a one-off cool collectible 1 ounce gold coin and it happens to be 7,000. No, I'm not saying like that. I'm saying the actual spot price, like if you go to Dubai or anything, right? No, it's whatever it is. I don't know, 1,700 maybe, 1,800. I have no idea. Something like that, right? But actually, if you go to try to buy an ounce of gold, it's from a proper reputable place, it'll probably cost you like 2,000 to 2,200 per ounce to acquire the physical. Okay, you see, there's like a $400, which is a pretty high premium making charge, whatever you want to call it, right? There's a pretty high difference there. And what is that difference? That difference is actually something called backwardation in the lingo of the commodities market. What is backwardation? Backwardation means, so suppose I try to buy from you a paper commodity, okay, or like a paper futures contract. So so say I'm a farmer and I want to make sure that like when my harvest comes out that I won't be in loss, right? So I will hedge against myself. That way, whether I lose or whether I gain, I will be even. That was the point actually of why the commodities exchange was set up. That was the point, to protect farmers and to protect people who are dealing in commodities, and just to make them equal on their risk they were taking. But then what happened was, after after Nixon closed the gold window in American English, as I like to always say, that link was broken between gold as money and the dollar. And then the traders, because it's like, it's paper is just paper, or like, money is just a debt. It's a debt note. It's a promise to pay back or whatever. It's not backed by anything real other than the confidence that you have in the entity that has made the promise, so-called promise. Okay, so if you once that happened, right, people began to just bet in the market. And additionally, what happened is they began to do something called shorting gold, shorting paper in silver, shorting gold, shorting silver in paper contracts. Okay, now what is this paper contract? And this is why I'm bringing this up in the context of that screen that I'm telling you to look at. So there you'll first see that gold price, you'll see silver price is about 900 or something, 900-ish per ounce. That's how much it is, really. But that's not what it says in the when you go to try and buy an ounce of silver, right? Or if you try to go buy a paper contract, which is like SLV or whatever, or GLD for gold, SLV for silver, don't buy it. Even though I am telling you those tickers, please, for God's sake, don't. No, because those are just paper contracts. Now you keep going further, you go on the right hand side again, and you will see the paper to gold, paper to silver. Now, I want you to do a practice of every day as part of your morning routine. Go to that website and take a snapshot of that paper gold and paper silver number. That number, every time you see the gold price going down in US dollars, you will see, or either silver even more so. Okay, silver is massively managed, manipulated market. In fact, big banks here have paid like billions in fines, and they still continue because it's profitable for them. So they're paying their fine is like, you know, in India we would call it a bribe, but over here they call it a fine. So it is profitable for them to pay the fine and to continue making their profits rather than to to not pay the fine and be ethical. Okay, so that's why they keep doing this. It's called spoofing the market and all sorts of games that I won't even go into. But anyway, so if you take those snapshots, right, every day, or actually even if you go onto, I think it was a communities tab on my own YouTube account or channel or whatever, you scroll down and you will see some places where I have myself uploaded screenshots of this thing, and I've circled the thing. Now, you know, people who know, they know, but people who don't know, or who even looks at my queue, right, my community page, I don't think like I have that many followers who bother to like look at what I'm posting or why I'm posting it. But if you look at that, and obviously already 16-17 minutes in, right, so most people these days have the TikTok attention span of 40 seconds of a goldfish, so most people won't even reach this far in this lesson, lecture, whatever it is. But if you get to this point, okay, and you go to that the community section on my YouTube, you will see that there is that I've been taking these snapshots, and like sometime, I think was it December, I don't know. Anyways, but there's you'll see when gold was tracking at 15,000. And the paper ratio was like whatever, 80 or 90 to 100, and right now gold is supposed to be 9,000 or 7,000 or whatever, and the paper contracts are like 115 or something ridiculous like that, and it's like, whoa, hold on. So that's how much paper they are shorting. And I think it's something like one ounce, it's one contract can short like a ridiculous amount of ounces. I don't want to misquote it, but I've recorded another video where I have gone into the detail about this. But basically it's exponential. Like with one contract you can control, like, I want to say like 60,000 ounces. I don't know, it's some ridiculous amount where it's like crazy, so all they have to do is sell short with the money that they themselves print, right? Because if you watch my Inflate Away the Debt, you'll understand how they print / create these credits, right? So they short it, and who is going to go against a big entity that has 0% interest rate money access to just short things, right? You're not going to go against that kind of an entity, because if you do, and you will lose your short because it doesn't go like that. Now, if you try, and these are not backed by physical metals, because you may say, hey, wait a second, so you're saying that they short the commodity, but then what if the people say, I want delivery of the actual thing now in that low price? You cannot take delivery, because only participants take delivery, and the participants are who? The other big banks and all, who also have a stake in this thing, you see. So you're not a participant, therefore you cannot avail of this. And this is where there's a video I made this year on Republic Day, India's Republic Day, so 26th, I think, of January. I made a video about how they were trying to do this in India also, and I read out this detailed article that was issued, and I translated it into normal people speak, because they're trying to do this in India also now, where they want to they want to instead of letting people just have it as their treasure, they want to make it an investable asset that benefits the gold ecosystem of traders and jewelers and the market, basically, and not the common man. So, common man and common woman, common person. Okay, so that's the paper game. So now when you go in that bottom column, right, that those numbers, and if you start to watch that, you yourself will see why they're selling paper gold shorts, selling silver paper shorts, to try to suppress that number. Okay, but really speaking, even in US dollars, I don't think it's going down, because the true test is how much does it cost you to acquire a piece of physical metal, correct? Not paper on the screen. I mean, not even paper on the screen, digits on the screen. So, like, I mean, when people say, oh, you can't eat gold, it's like, yeah, and I can't eat my phone either. Oh, that's such a beautiful bird I just saw. Anyway, sorry, obviously get very distracted, especially with like pretty birds and flowers and things. Anyway, so okay, where was I? Yeah, so that's one thing on the true price, as measured even in dollars. Now let me tell you another thing of, okay, so to answer your question about do I think gold will go up in price? Okay, why it's complicated, why yes and no, apart from it's even in it depends in which currency you're measuring it. Okay, I'll tell you why. I think that commodities overall, which means like silver, platinum, copper, all these guys, right? And not right away, these are more long-term charts. Those are going to go up like crazy exponentially, and I'm not even kidding when I say crazy exponential. Why? Well, first of all, the measuring stick has been broken. Okay, so when the measuring stick is fixed properly, the exponentiality of this is going to be really revealed. Forget that. The other reason also is this, and why am I reaching this conclusion, right? So if you look at the chart, and you have to be a little bit more technical on this, you have to go into tradingview.com. You have to create a measure, like an algorithmic measure by a formula. You have to, or you can even, I don't know if they have it like openly, available. But if you write it up in like a source code, you basically derive a formula of the gold to silver ratio. Okay, and then you look at that ratio on a chart. So I'm not saying just the gold on a chart or silver on a chart, but the gold to silver ratio on a chart. Now, what the chart is telling me is that that gold to silver ratio is going to flip. When it flips, what happens is everything becomes more expensive. Okay, so but when I say everything becomes more expensive, when that ratio flips, temporarily gold goes down while silver goes up, right? So that's what I'm saying, like that flip, right? With the gold going down and silver going up. So you could look at it this way. Okay, today gold is so I'm just talking spot price, okay? Gold is, let's just say, forget the 18 and the 21 and whatever. Let me just say $2,030. I'll just keep it even for all. Let's assume that today gold is $2,000 an ounce and silver is $30 an ounce. I know that's not accurate, but just remain with me here. And this means that if silver goes up to 40, that's a 25% increase, right? 20 or 25%, 30 to 40. So to keep that ratio same, gold also has to go up 25%. So that's again 1/4. So 2,500. But what if that doesn't happen? What if it's like gold goes to 2,400 and silver, instead of going to 40, goes to 42? You see how that ratio has flipped. So then gold has gone not down, but the gold to silver ratio has flipped, right? Where it's like silver is going up more than the gold goes up, because usually gold goes up more. Well, it depends on when. Usually in inflationary times, silver goes up more, but silver is so manipulated that it doesn't. But that flippening that I'm seeing happen, when that starts to happen, everything else temporarily, ratio-wise only, not in real numbers, in ratio terms, because I said 2,000 to 2,400, that's still an increase for you to buy it. But ratio-wise, from say silver standpoint, that went from 30 to 40, it went up actually to 45, right? That, from a ratio point, it's more. Or silver, the other ones are more, and gold is less on those terms. So that chart, that flippening that I'm seeing, is showing me that the other things are going to now go up fast, while gold goes up at a slower rate as measured in US dollars. So I hope that helps answer the question as thoroughly as I can. If you have more questions, please don't hesitate to ask me in the comments. And what else did I want to say? Don't hesitate to ask. Again, like the short answer, like I said, and here's the thing: even if gold goes quote unquote down in paper value terms, don't buy that much gold that you will have to sell when gold is quote unquote down in an emergency. Don't do that. But if you have excess funds, or you already have a stable income source, and you you have your living expenses covered, anything that I would say you think is extra, that you cannot go wrong. You cannot go wrong. And I don't mean just with gold, I mean with real things. And I mean real things of value, not real junk things, real things of value. And of course, investing in yourself, investing in your community, investing in people who need, in the needy. That you can never go wrong with making an investment in good karma. Okay, so that's my view on that. Okay, I hope this was helpful. Take care. Bye.